Hello, everyone. Welcome to another edition of our More Than Market series. My name is Shalon Williams, Director of Investment Management Services at NEI Investments. So last week, John Bay spoke about the global implications of Russia's aggression in Ukraine. This topic is still very much on everyone's minds as attacks intensify, human tragedy deepens, and governments and companies take further action against Russia. Today, I'd like to continue that conversation about the economic and the market implications and provide some additional context for you and your clients. So today I'll take a look at inflation. It's a topic that's on everyone's minds. We're feeling the pinch of higher food prices, higher energy prices, and really higher prices across the board. So let's talk about what's happening with inflation. When will prices moderate, and what are some of the measures that can likely be implemented to avert another energy crisis like this in the long run? So let's start with the US market and the inflation reading that came out very recently. We saw where US headline CPI rose 7.9% in February from a year earlier, and that was a 40-year high. So that was a pretty hot reading that came out. Month on month, the increase was 0.8%. And when we look at the factors that really drove that increase, we're talking about rising gasoline prices, food prices, as well as housing costs. The picture was quite similar when we look at core CPI, and core CPI really excludes food and energy and really looks at key components, and that reading was also up 6.4% relative to a year ago. So let's just pause for a second here. I think that the question that is on the minds of many persons is, will inflation moderate, or when will inflation moderate? And I'll just speak to the US context here for a moment. February was forecast as the peak inflation for the US market. However, this may not be the case given some of the tail risk from higher commodity prices following the Russia-Ukraine crisis. On March 8th, we saw where the a US ban was announced on Russian fossil fuel, including oil. And that tightening of oil supplies really sent the prices of US retail gasoline and other commodities to some of the highest levels that we have seen in a very long time. And that makes it very likely that for March, inflation will likely be very elevated, maybe a bit more than 8%. Inflation may not come down for maybe the next several months, and that will likely depend on how the conflict plays out and how disruptive the sanctions actually turn out to be. So a key element in terms of the inflationary impulses going forward will be energy prices, and more specifically, there'll be oil prices. The US and Canada are net exporters of energy. However, Europe is a net importer, which makes the problem within the euro area a little bit more acute. Notwithstanding that, with oil prices being so elevated and the negative impact that it has on consumer discretionary spending, as well as the economic growth implications, there are now renewed conversations and interest into how can we now diversify our source of energy. When you think to your investment portfolio, we generally speak about the need for diversification in order to smoothen portfolio volatility. The same concept applies with our sources of energy. In the short term, in order to get over this price hurdle and stabilize the market, there will likely be some ramping up in terms of oil supplies. However, in terms of the longer term, there will be greater focus on renewables and the sustainable transition to clean energy. In Europe, we're seeing where there are no talks. The talks are now being had to eliminate Europe's fossil fuel dependence on Russia by 2027. And that elimination may come in the form of Europe's transition to greener energy. While in the US, President Joe Biden's Build Back Better plan, which partially focuses on speeding up that transition to cleaner energy, may get some renewed focus, may get some renewed attention, though it has been in limbo for some time. So the current market turmoil and the war in the Ukraine is not expected to derail the sustainable transition, but in fact, it will more than likely give it more legs. And having portfolio exposure to clean energy, such as our recently launched Clean Infrastructure Fund, may offer some benefits to your portfolio at this time. So with that said, thank you for tuning in. Hope you found today's discussion particularly helpful. Watch out for next week's edition of our More Than Market series. And as always, reach out to your NEI representative with any questions that you may have. Thank you, everybody. Stay safe.